Welcome back. You're watching Business Morning on Channels Television. Bosun is still here with me in the studios as we turn our attention to some of the current developments in the banking sector. Bosun, it's good to have you still sticking around with me in the studios. Yeah, it's a beautiful Friday, so let's chew over some of the issues that have come up in the last couple of weeks. Now, for the first time since the major restructuring, let's call it, in the banking sector in 2009 by His Highness Emir of Kano, Muhammadu Sanusi II, at the time he was a CBN governor, this is the first time we've seen a massive layoff in the banking industry. Now, just yesterday, the Bankers Committee actually met in Abuja, and they say, let me just quote, that the banks would refrain from further job layoffs as requested by the federal government in the hope that certain fiscal policies that triggered the trend will be addressed by the authorities. First of all, Bosun, taking a look at the trend, how did we get here? How did the banking industry get here?
Well, I guess the Bankers Committee just put a signature on my position a couple of days ago that, look, this is the first time where we're seeing straight on, strong fiscal headwinds hitting the banking sector head on. What we heard in times past had been various interventions that knocked the industry left, right, and center. And it's one of the most dynamic you've ever had in Nigeria. The banking industry is like a cat with 9 lives. It never gives up. It always rejuvenates itself. There's always a resurrection. There's always getting back to vibrancy. And whether we like it or not, the financial services sector, which has the banking sector as part of the macrocosm of the ecosystem, is one sector that we shouldn't allow to be knocked into comatose or knocked off its trajectory by the economic headwinds that we face locally and a bit of buffeting from the outside. Now, how did we get to where we are? We reformed the banking sector in 2009. If we just go back after the 2004, 2005, 2006 boom, which everybody went into proprietary trading and what have you. Then we came out of that. Then His Eminence, who is now the Emir of Kano, was then the central bank chief, threw in the sickle, cleaned up the system. Again, part of the problems back then were exposure to oil and gas, downstream import or whatever. And these were the deep days of petrol import subsidy, if you want the word, racketeering, opportunistic trading, and everybody was doing portfolio, a job, without doing real banking. So as soon as the banks were asked to take off non-banking institutions, non-banking, non-core banking subsidiaries like insurance, some banks had real estate, some had all kind of supermarket, whatever you call it, then you go down now to core banking. Now, stripping the banks down to their core banking means that they will have to do core banking. And what does core banking means? That you just do the basic, take deposits and lend it to customers, right? And you just recycle it that way. And that's what banking is all about. Now, because those fatty assets, as it were taken off the banks, they were now exposed. But again, what would they do? Because the economy itself does not have what it takes to lend. In real terms, because of inflation, because of fiscal structure, whether you call it policy somersaults, 1 step forward, 2 steps backward, a lack of ease of doing business, the environment is not competitive, it takes months and whatever to get papers, whether it's for land or for expatriate quota or whatever. The environment was hostile. That the only thing banks could go is to go back to their, I don't want to use the word wayward ways, but the easy ways of doing business, which is get deposits from government and the parastatals, ministries and what have you, do some FX trading, go underground, do a bit of the capital market, do a little bit also of into oil and gas, which was new business for everyone. Power, I beg your pardon. Then a bit of upstream lending for those who want to buy ConocoPhillips, what have you, Shell, a few of those assets that were. So, and they put about $5 billion into that within the last 5, 6, 7 years. So they started venturing into big ticket transactions in the oil and gas and electricity sector. Now, because things hadn't really worked out the way we wanted it. We didn't save for the rainy day. We didn't make any serious fiscal plan, as it were. We were busy sharing the windfalls of the last 5-6 years, what happened was that as soon as oil prices go down, the banks will be, they're now, what they call, I don't want to use the word HIV, but fully exposed to the vagaries of the fiscal problems that we have locally. So putting the word fiscal there means that the banks yesterday push it back to the government and say, hold on a second, we're not to blame here. You fix things for us, then we'll be fine. You want us to stop sacking, we will stop sacking workers, but you need to fix because we can't fix it for you.
Yeah, because, basically, the monetary and fiscal policies actually work in tandem. So the Monetary Policy Committee is coming up...
Should work in tandem.
Oh, should be the operative word.
Yes.
So the Monetary Policy Committee comes up with its own policies that it feels is in the best interest of, the banks, which it regulates, the financial services sector. And then they're expecting that the fiscal authorities also come up with policies that will work in tandem and complement whatever it is that they've come up with. But then, that's for all intents and purposes, that's how it's supposed to be. But this is where we find ourselves at the moment. They've pushed squarely that the fiscal authorities should come up with, good policies to enable them work. But can they, in the interim, manage the situation as best as they can?
Harriet, don't let us name names here. You find a system that puts an umbrella, puts a canopy over about 3 trillion naira government funds called TSA. Now, look at a few banks that were penalized by the central bank for hiding part of government money called the TSA. Now, we don't want to name names, and the billions they pay in fines. Now, if you pay 10, 20, 50 billion naira in fines, that goes into salaries and wages and what have you for those banks. Now, if you take 3 trillion out of the entire banking system, the banks were living once again after we came out of the 2008 market boom and the busts. And Lamido Sanusi, His Excellency, or His Highness, trimmed down the system between 2009 and 2011. There were a few mergers and acquisitions by 2012, a few load shedding there. We're now back to the fact that if you withdraw 3 trillion naira from me, hold on, and a few seized monies.
But that money wasn't yours to keep. The money belonged to the government. And so the government has said that because we want to plug the leakages and those loopholes, let's have a central account.
On. Not just 3 trillion, the ghost workers. You have to pay ghost workers via the banking system.
Okay.
So you have dozens of thousands of ghost workers, federal, states, local governments, which the government's plugging. So,
and which the BVN,
doing a good job.
Which the bank verification number actually took care of. So we now had that very clearly stated that these are the number of ghost workers you have because they don't have bankers verification
number. That's a drain on the government. You're talking about close to 200 billion. Add that to about 2 trillion. Then you have recovered assets. The banks are, and I want to use the word, technically empty as it were right now because where is the money? But again, they need therefore to go back to the government, who is the godfather to every one of us, to say, hold on a minute. You need to give me an environment in which I can live and thrive and do business.
But why did they have to wait until, this question has come up so many times, why did the banks have to wait until when, they definitely would have seen that coming, that definitely one of those governments would come in, one of these administrations would come in and implement this treasury single account. So if the monies are taken out of our vault and put in a central account, what happens to us? How have we prepared ourselves that in the eventuality that happens, we're going to still be able to run our business?
Before 2008, 2009 global meltdown, Financial Times of London did a story, which I had a copy somewhere, I can't remember where I had it, that easy money will hurt the United States. I think 2005, thereabout. A few years before 2008, 2009 market meltdown. Because the banks on Wall Street, everybody were lending money to every Tom, Dick, and Harry. The period of easy money was what came to bite the backside of the global marketplace. And we went into a tailspin. We tried to fix that. Some of the problems still, some of the consequences are here with us today. As soon as we finished with our own banking system a few years ago, the easy way to make money, Harriet, is for ministries and parastatals, what they call the MDAs, to get their allocations from the budget, to get the FARC allocations every month by states and local governments, and they just pump into the banking system. I've been on the street for quite a long time. There were years ago, decades ago, when as soon as FAC allocations are announced every month. All the days it's announced, bank CEOs are always in Abuja. Go and watch it. And I'm saying this. You can verify. 20, 30 years ago, they're all in Abuja waiting for the meeting to end, and phone calls are, I got XY amount, I'm giving you so percentage of it. And bank executives told us government officials were demanding way back 20, 25 years ago as much as 40% interest on those deposits. And they told us, journalists, what do you want us to do? We got thousands of shareholders. We got owners who put their money in. We need to make profit. So where do we go to make money? There's nowhere to do. So this is easy money on the table. I'm going to give you 40%. So you take that 40% upfront from the government deposit. You keep the rest. You buy stocks. You do proprietary trading. You go back and use the same money to buy government treasury bills. You get yields on that. You invest that in. Look, it's a whole convoluted environment. We need to go back to, sorry to use your phrase, I don't want to use it, restructuring. We need to restructure the economy. And if that means we need to go behind the curtain to do a bit of some, what you call political restructuring, I'll leave that to the guys who are experienced, knowledgeable in that. As far as I know, I do business and markets. But we need to restructure. And what the Bankers Committee says yesterday was, let us, government, please help us restructure in a way that we can lend money at rates that we can do normal, healthy, we can stay through the narrow path that leads to, can I use the word righteousness? Rather than through the wide and easy way that leads to perdition.
So in the coming days, that's a lot of conversation is going to be around that, and we're hoping that the fiscal authorities, who, as much as possible, have complained about the rationalization in the banking sector, will also look into the matters and issues that have been raised by the Bankers Committee, and let's all have, my favorite phrase is a win-win situation.
The issues are not new.
No, the issues are not new. But we have to find new ways of addressing this issue.
No, that sounds like restructuring you talked about.
Business Morning continues in just a moment. Bosun, thank you so much for coming on the program this morning. And of course, yes, have a great weekend. But I know Bosun is back on Business Incorporated. You can catch him, or you can also catch him on Twitter. But coming up in just a moment, we'll be focusing on the markets. Rosimi Fakaijo joins me after now. Stay with us.